Hi everyone, I'm Ken from CryptoTradingKS and the inventor of the CTKS method and BORSOG trading. If you're new, a very warm welcome. And welcome back KS family. From my 30 plus years in financial markets, I explain the smart money mindset to assist you to be more of a financial blessing to yourself and those you love, gaining real wealth and positive excellence in the process. Markets are very anxious of a 75 basis point increase in the federal funds rate, and there's currently an 88% chance of that and only a 12% probability that the Fed will raise interest rates by 50 basis points. It was widely held previously that 50 basis points would be the absolute maximum that they would raise rates. As a community, we do deep analytical dives, and the speech Jerome Powell gave at Jackson Hole talked about the thing that the Fed had to fix was rational inattention. This doesn't get a lot of views on mainstream media. That's why we actually dig into the transcripts of these particular Fed speeches. When the Fed speech came out, I said to our beloved community, I believe a 100 basis point increase will become statistically probable. Back on August the 26th, this was absolutely inconceivable. With 9 days to go till the next FOMC meeting, it's highly probable that we will see a 100 basis point probability enter the picture for the first time. In the last trading session, we saw fear decrease. The major indexes rally through resistance, especially the NASDAQ 100. It's come through resistance at the moment. We saw bond prices find a level of support inside the market. Gold also. We saw the DXY, the dollar, sell off. Yields hit a level of resistance, and oil bounce from technical support. We also saw junk bonds actually doing a technical repair. Looking at the S&P 500 and actually doing the analysis for full market price action to determine the smart money buy and sell levels, these SL lines, which are called Stanfield levels, because this analysis is drawn from the CTKS method, we can see that we're actually above a key level of support at 40.39. Now, why is this important to us in crypto? Because as the major market moves go, so too do the crypto moves go. We have to pay a lot of attention to the stock market. Masterclass students have a rule for that. Rule 225. Bitcoin cannot escape the stock market's gravity. Now, why are we caring about Bitcoin? Why don't we talk about the alts? Because no alt can escape Bitcoin's gravity either. When looking at the indexes, we always think, what is the probability that things could go against us, go nowhere, or go for us? It's kind of like a stoplight, A and F. Remember that you control the trade or your investment, but the market controls the return. What potentially could happen here? We could get a retest of this now support line at 40.39. It could come down further and fill that gap at 39.78. There's a lot of support around this particular price point. Many people want very simplistic explanations as to where price will go. Those simplistic explanations do not exist. Instead, we have to collect probabilities. We could see a further rallying up to the 41.46 mark, or we could see consolidation. You have to be mindful of these three scenarios at all times. Looking at the dynamic daily smart money buy and sell levels on gold, it can give us a bit of an indication as to where the indexes may move. We've seen with gold that it's hitting a level of resistance at 1731. We also have multiple levels of resistance between 1758 and 1767, and not too much support below. The more information and data we look at, the more fulfilled our probabilities will be. And when we look at the DXY, the US dollar currency index, a very key level of support has just been broken. We've also had a retest and a resumption down from that 108.850 level. And remember, these dynamic daily smart money buy and sell levels are actually formed from all of price history, not just recent price history. This would tend to suggest that we're going to see a rally in the major indexes. The DXY has been incredibly important to understand what's been happening inside the markets. For example, in the background, you can see Bitcoin, and Bitcoin is a very, very good way to understand what could be happening with the major indexes as well, because it trades 24 hours a day, 7 days a week. It never sleeps. What we saw when the DXY was coming down, Bitcoin was rallying, and the markets were rallying as well. When the DXY came down again, Bitcoin actually broke out, and we can see that it's starting to break out now. Does this mean it's all clear sailing and we can go all in and more? We never do that. Professionals never go all in and more. We're all about synchronizing and scaling, and when we desynchronize, we descale. That's all about BORSOG trading. The fact that the DXY is coming down is really good news for us, because we've seen a lot of inverse correlation between the DXY and the major indexes, and of course Bitcoin as well. When we looked at Bitcoin a couple of days ago, I just pointed out this particular price pattern here and said, as price was coming up strongly through this resistance, I was saying we could get a similar pattern to this. This has played out really, really nicely, but you can see this pattern is much weaker than this pattern. This pattern is actually much stronger. Does it mean price will just continue to go up and up and up and never come down? Of course not. Price is always moving in a wave. We understand that. It goes up, comes down, goes up, comes down, goes up, comes down. You always need to anticipate the wavy nature of price behavior. Bitcoin is currently trading at 21,792. Will it actually breach this resistance and go to the next resistance level, playing in around that 23,148 mark? Well, it looks pretty good, and what we can actually see is price is trying to get over this short-term resistance area, and it's done so. The short-term resistance was at around 21,500. Gaining an understanding how price moves is incredibly important. For example, what happened back here? We got over one resistance level here, and then we had a breakout. Note that it came back to basically test that level. What could that look like? Are we going to, for example, are we going to get up to this level of resistance here, around this 23,800 mark, and then come back to test the 21,500? Or are we going to come back and test the around $20,000 mark? This is how you must be thinking all the time. Think about how it could go for you, how it could go against you, and how it could go nowhere. And that's why we have our BORSOG codes that we do each and every day. First of all, you must understand, and this is one of the best things that you can ever know about the market rewards your knowledge and emotional control. Emotional control is absolutely critically vital. Because I've been in the markets for so many decades, I thought, coming from a traditional finance background, doing a finance degree in actuarial science and all that kind of stuff, I thought, oh, you just need buy and sell levels. The emotional side is just unimportant because I'm a mathematician, so I love numbers. What's emotion got to do with it? Back in those dark early days, I got on the emotional bandwagon with all other retail investors and traders. I went through panic and blame, conflict, and I understood these were the lose money rule zones, because if you don't control your emotional state, you will wipe out your account. As a former lecturer in first and second year statistics, I think it's really important to put intellectual constructs around things. So I created KS zone analysis, and these are the 4 stages that every single investor and trader progresses through to become consistently profitable and attain real wealth and positive excellence. Zone 1 and Zone 2 can actually occur over many, many years, and you know you're in these zones because you don't have inner and outer peace. When you enter zones 3 and zones 4, you become very, very peaceful. Conflict is a long, long way away because you know that the more you get into conflict, the more money you lose and the more unhappy you are. Getting into zone 3 requires a lot of courage because we have to give up past habits where we actually externalize the problem. Instead, we focus on learning, focus on what we can do better next time. And because the market will never know you, it can only actually reward your knowledge and emotional control. That's why we say, I am dedicated and committed. I win or learn and never blame. These are really, really important things. When people blame, they get into conflict and they lose the lesson. That means they have to repeat the lesson at a higher price level, at a higher cost. Oprah Winfrey had a really good quote on this. She said, it starts as a pinch and then a poke, and then all of a sudden it turns into a slap and far worse. You'll find that the financial markets are much more than just buy and sell levels. They're deeply emotional by nature. They'll prey on your hopes, dreams, and fears, and you must control your emotional state. When we dive in and look at the dynamic daily smart money buy and sell lines, the Stanfield levels on Bitcoin, we can see Bitcoin is starting to get over an incredibly key level. And this is key because Bitcoin has been rejecting it, trying to get over, rejecting it, with the DXY actually breaking down from very substantial resistance. That is a very, very good sign, not just for Bitcoin, but for the main markets. But the DXY must continue to do so. Bitcoin is currently trading at 21,808, and this very, very major level of once resistance potentially turning to support is 21,691. And remember that these levels change every day, each and every single day. What we're looking for Bitcoin to do now is to actually stay above this support line, to confirm it as support and make a play for that 22,625 mark. Now we know that that's not a guaranteed thing to do because the market controls the return. All we can do is control our trades and investments. We could come down, see a sell-off down to 24,706. At the moment, we're seeing a lot of strength and a lot of confluence. If the DXY stays weak, we would expect prices to go up, even though the Fed raising interest rates by 75 or even potentially 100. And I've seen people start to talk about that now. Back when the Jackson Hole speech came out by Fed pal, it was literally inconceivable that anything other than a 50 basis point increase would occur. And I put out a little thing on Twitter showing Fed pal just kicking the market. And it looks like that actually may happen. What we may be getting is a whole liquidation of short positions. So we need to check through what's actually going on under the hood, inside the market. The shorts and the longs can tell us a very, very good story about what could potentially happen. If the shorts are ramping up, they expect downward price momentum. If the shorts are coming out of the market, it means they're losing their confidence. The prices will go down. And we have to bear in mind what the shorts do relative to the longs as well. We can see when we look at Bitcoin shorts, they've definitely lost so much confidence. It was almost a sure thing that the shorts would win, and it was almost a sure thing that the dollar would absolutely and utterly rally. Both of those things actually inflected, they turned upon themselves. And this is what institutions do all the time. They don't like everybody winning. They're the ones that want to win. Naughty institutions. We can see the longs have been buying the dip and coming up. So let's get a relative figure on liquidations. Over the past 24 hours, there's been 102.95 million in liquidations across 35,550 positions. Remember yesterday it was about 100,000 positions. And when we look, for example, across the past 24 hours, we see 64% of total liquidations were long. Looking across the past 12 hours, 63% long. Past 4 hours, 77% long. And the past hour, 94% short. The shorts have just entered the picture in terms of liquidations. The shorts are very, very clever people. They've understood because the DXY has been rejected from its very strong once support, now resistance, they may see a lot of pressure on short positions, so they're covering. The longs are also looking at it, saying, okay, I feel more confident to get in. But the key is the DXY must not break this key level of 108,826. If it manages to get above that level and starts to rally again, it would have been a fake out. Always keep this in mind. There's so many things that you actually need to look at. That's why crypto technical analysts mark up their charts first with the CTKS method. They look beyond the crypto market, looking into the stock market, collecting world events, checking the markets and collecting probabilities, just like a really good detective. And then we hop back into the crypto market, understanding that we must enhance our pattern recognition, find the market's focus, and the fact that opportunities reset every single day inside crypto. But before we buy or sell, we must make volatility our best friend. How do we do that? By mastering emotional control, because professionals are not emotional. You can think of the markets like a game, and all games, especially the important ones, all involve skill. They do not involve luck. If you're relying on luck, you need to rely on knowledge. Over the past 24 hours, the crypto market has come up 0.26% to 1.06 trillion. The greatest gainers in the top 100, Celsius up nearly 15%, Ape a little over 12%, PancakeSwap 4.4% up, Compound 3.3% up, as is Chiliz. The greatest losers in the top 100, USTC down 16%, Luna down 10.6%, Raven down 10%, Helium down around 8%, Curve down a little over 5%. When we look at the top alts, we can see this particular blue line, that's Bitcoin's gravity, and we know no alt can escape Bitcoin's gravity. So as we look at Bitcoin coming down, for example, we would anticipate that Ethereum would come down as well. When we look at Binance Coin coming down, we would expect that that is being led by Bitcoin, and any repairs, any upward price momentum would be also related to Bitcoin. Keep your eye on Bitcoin at all times. And what we see is that Ethereum is much stronger than Bitcoin at the moment. BNB also much stronger. ADA just going into alignment with Bitcoin's gravity. XRP in alignment. You will find you will get synchronization and desynchronization of alts with Bitcoin all the time. You want to watch for that. Solana just synchronizing in, then desynchronizing, gaining strength. You'll find that some gain strength, like Matic has gained a lot of strength, and then they tend to get pulled back in Bitcoin's direction, especially if Bitcoin sells off wildly. We can see Doge moving in alignment with Bitcoin's gravity, as is DOT, and Matic showing so much strength. Go Matic! Something really interesting when we actually analyze Ethereum. There's one difference with Ethereum's price behavior, with its smart money buy and sell levels, with these Stanfield levels. We can see Ethereum is actually under two areas of resistance, where Bitcoin is actually above a key area of resistance, trying to turn it into support. And we know how important the DXY is just at the current time. We can also see that there's some fairly heavy resistance up at 2116 for ETH, but not a lot of resistance levels between 1872 and that 2116. We know that no alt can escape Bitcoin's gravity, so it's not surprising at all that the alts, for example, this is Binance Coin, look very similar in structure to what happens to Bitcoin, which is quite interesting because when we look at these dynamic daily smart money buy and sell levels, we can see the resistance for Binance Coin is up at 308.40 and 309.30. Remember, it's underneath. It's actually supporting Bitcoin at the moment and marginally just above Ethereum, but quite a deal away from Binance Coin. This is the power of the CTKS method. And one thing you might like to take note of, in BNB, we've got a very nice support resistance, support level coming in at 273.90. And that other resistance level is up at 309.30. I just got a bit ahead of myself. Having a look at Optimism, which is OP, we can see a level of resistance up at 1583, quite a good level of support at 130, and we can see a variety of different levels around the current price. The current price is 1382. I never endorse any specific crypto. You must do your own research. I just like to point out that it has a lot of trading volume. So if you're wanting to go, if you have a large account, OP is not a bad thing to have a look at. The market rewards active learning, and the more active you are, the more money that you will make and the less stress you will have. Please let me know your BORSOG codes. Do you think the market is going down, going flat, or going up? That's the first letter, D, F, or U. And what do you think the probabilities are of price going against your specific trade or portfolio? Against, just nowhere, or for you? And how synchronized do you feel with the market? That's the third component. Well done to everyone who put in their BORSOG codes yesterday. This will make a huge difference to your capability and ability to read the market. I'm always looking for new ways to help and assist our beautiful global family. Well done, everyone. And thank you to Dreamsick for sharing. Dreamsick was talking about watching Beowulf. Beowulf gave in, and it's a film. It's a really, really good film, actually. It's actually an old English epic poem in the tradition of the Germanic hero legend, consisting of 3,182 lines. And if you don't want to read the book, you can just watch the film, Beowulf 2007. Really good film. Dreamsick spoke about that poem, that ancient poem, of the main character giving into the inner demon, creating generations of suffering. Blame is a demon. It keeps you in a cycle, forever holding you back. Only you can break the cycle of blame and become the hero of your own story. It's just absolutely beautiful, and it's true. Blame is the most destructive thing on the planet. It causes so much misery everywhere. But blame actually has a very hidden defense mechanism. It convinces the people blaming that somebody else is to blame. The problem is outside themselves. As promised, I'll read out from a couple of days ago when we were talking about this in the community. Tails said, in dealing with blame, it's helpful to be understanding and compassionate with others and yourself. Seek to take the steam out of conflict and view the situation as a distant observer. Really good advice. Thank you, Tails. And Jay Bripto had a very, very good thing to say. Blame can be short-sighted. There's so many interconnected factors. When we can blame someone for something, but then there's someone else to blame for why they've done that, and someone else to blame for why they did that as well. It's an infinite chain of blame. Just brilliant. If we want to have a happy life, we must break that infinite chain of blame. Well done, Jay Bripto. Brilliant. And Vicente, thank you, my friend. Blaming is very easy, but if we really want better solutions, we have to learn and move forward. Blaming is to lag behind. Excellent. And Rajat said, what worked for me to overcome blame was to take responsibility for myself. When I realized that only my actions and responses were within the sphere of my control, I stopped blaming others and started working on my own learning and development. You're a legend, Rajat. And Johnny said, if I find myself blaming something else or someone else, I direct my attention inwards and take responsibility, knowing that if I blame somebody else, I can't do anything about the situation. I don't like to feel helpless and miserable, so I don't blame. Brilliant, Johnny. Michael said, I found blame to be counterproductive. I find it much more useful to accept whatever has happened, and that the past cannot be changed. Recognize my own role in that situation and try and move on. In the past, I've wasted time and energy trying to assign blame, but it doesn't really get you anywhere. It's like blaming Mother Nature for earthquakes. It's not her fault. Thanks, Michael. Jayling said, I overcame blame by recognizing that taking responsibility actually made me better. Blaming just throws away the desire to learn and to improve. And in the markets, if you lack that desire to learn and improve, the markets will take your money and it will be merciless about it. MH said, the way that I get over blame is to remind myself that we're animals and 90% of our behavior and motivations are unconscious. So when we become conscious of this fact, we can be more empathetic with ourselves and others. Learning how to deal with our own internal wiring more tactfully is the advantage. And it's more effective to create momentum with small, consistent, incremental action than it is with large, sporadic, heroic action. Just being a little bit better each and every day is the way. Thank you, MH. Really good words. The reason I talk about these things, I want to help people to get out of Zone 1 and Zone 2, the panic zone and the blame zone, as quickly as possible. And the only way to do that is to directly deal with the situation head on. How do you get out of these zones into Zone 3 and Zone 4, where you have a beautiful life? And that's what it's all about. To have a beautiful life, we must let go of conflict. Conflict doesn't serve us. That doesn't mean we don't have boundaries. It doesn't mean we don't enforce boundaries, because of course we do. But the conflict is it necessary? Do we have to get into conflict? Conflict is always born of blame. Acts of violence and acts of aggression all have their birth in blame. So many people want to be happy, but you can't be happy and in conflict at the same time. It just doesn't work that way. One really helpful thing, when you look at the market, don't blame the market if the market doesn't go in the direction that you want it to go in. Obviously, we always need to consider the three-dimensional positions of the market. It can go up, it can go flat, or it can go down. If we actually look at this, we don't get caught in blame because we get caught in knowledge instead. We get caught in preparation because we're willing and able to act on our words, because our words are formed through integrity. The markets can be incredibly frustrating. You may get something like this and you say, okay, this is just definitely going to come down. That looks like a sell arc there. It's just going to come down. But then you find that it just takes off and you say, oh, I'm so angry. It just took off. Or, for example, that you get in and it just collapses down. Of course, you can get angry and blame as well as that. Why did the market do this? What happened? It's just part and parcel of financial markets. So when you actually get out of Zone 1 and Zone 2 into that learning mindset, you won't get emotional at all about it. You'll just say, okay, what did I learn from this? It's really important to be kind to yourself, and just not yourself, but others as well. You want inner and outer peace. One of the most powerful ways to actually destroy blame is through empathy. Please let me know your thoughts on empathy. How have you found empathy has helped you? And what is empathy? Even talking about what it is a really good idea. Looking at the DXY, it's doing its absolute best to get over this resistance level that it's just created for itself. This may be a retest of resistance, or it may be a false breakdown followed by a breakout. It's a pretty important time to be watching. Please let me know in the comments, have you been watching the DXY as a kind of a flag to understand what could happen to the markets? And are you looking at other things? Sharing those things would be really terrific for the community and for yourself, because we can always consolidate ideas together. Our global family is all about winning together. Please consider sharing and liking this video and subscribing to the channel. We would love to have you as a part of our globally extended KS family. If you have friends or family who could benefit from positive excellence in what we do each and every day, please introduce them to our community by sharing a video. We'd love to see them here. We have one of the best communities on YouTube. Thank you to our moderators for keeping our community safe from scammers, and please note I don't have WhatsApp or Telegram. Thanks also to the CTKS ambassadors for assisting Masterclass students. And of course, a very big thank you to you for watching and for being part of our global KS family. If you would like daily updates on price movements in the crypto market 7 days a week, 365 days a year, please subscribe to YouTube. I've left helpful links in the description of this video, such as the tax software I use and the CryptoTradingKS Masterclass. I'll be talking with the shortlisted CTKS Partial Masterclass Scholarship awardees this week, and I'll be actually awarding the Kerry Chambers CTKS Masterclass Scholarship, which is a partial scholarship, this week towards the end of this week. And if you would like to apply for the scholarship, you can find the link in the description of this video. One of the foundations upon which people are awarded the scholarship is the absolute showing of persistence, dedication, and commitment. Active learning is critically important for the masterclass. Please remember, crypto is volatile. Always prepare yourself for the best and worst case scenarios. Reality will likely be between them. Stay safe out there, my friends. Take care and see you next time. Bye for now.